I'm here at the PCBS stand with Brian Africa, Marketing and Business Development Executive for PCBS. Brian, I understand that the construction industry has been in very tough times and there have been a number of liquidations recently.
Correct.
Have you seen a drastic increase in performance bonds being called in as a result?
Sarah, thank you. Yes, we have. It is a sign of the times in terms of money being available for contracts. We do, however, hear reports that government is not spending enough of the money that's been allocated for infrastructure. So a lot of these liquidations are also taking place as a result of mismanagement of finances within these organizations. So I think where we stand in terms of performance guarantees, it's not really a situation where we can point fingers directly at one party only. I think it's a combination of factors. Mostly it is, though, mismanagement within these organizations. A prime example is Sanyati. There's been a lot of talk about government being largely responsible for the demise of this construction company. However, there are various other factors involved as well that has obviously not surfaced as yet. But we have seen a number of a spike in the call-up of guarantees, which naturally follows these companies going into liquidation. The knock-on effect of that is quite substantial, and we will see a lot more activity, hopefully not negative, now that the Competition Commission has made a decision on the construction collusion. So hopefully we might see guarantees being called up in the future, guarantees issued in respect of the stadiums or any of the World Cup related projects. It's unlikely that guarantees will be called up on those projects because those projects have been successfully completed, the stadiums have been utilized, they're still standing. However, the fines that have been imposed on these companies will definitely have an impact on the company's ability to operate as a going concern going forward. So our concern is really in the short to medium term in terms of how cash flow is going, what the status of the cash flow is within these organizations. And from a financial guarantee or from a guarantee perspective, we are really very cautious and really looking closely at all of the risk factors that should be considered when issuing performance guarantees.
And Brian, are you confident that you can sustain this onslaught?
Sarah, it's a matter of we have to. We are in a situation where we do provide a service to not only the major construction companies, but we have an extensive number of small to medium enterprises that rely on insurance companies issuing performance guarantees. That element of our market is, however, very stable. We haven't had any major concerns within that sector of the construction market. So definitely it is sustainable. We will obviously have to implement a few more measures and risk management tools. And obviously it will have an impact on the pricing of our product as well. But definitely we will have to find a way to actually sustain the market and learn from our experiences in the past. We have seen a few construction companies going into liquidation after a failed business rescue process. So we've learned from those procedures, and we've obviously now in a position to ensure that these contracts are not just, guarantees are not just called up on these contracts, that we can actually find replacement contractors to complete the work as opposed to just paying out guarantees or paying out claims. We're actually working with employers or beneficiaries of these guarantees with the objective of having the contracts completed first before we look at any claims on damages.
Okay, interesting. And Brian, is there anything that insurance industry can do to assist in the crisis?
There's a lot that the insurance industry can do, and it's crucial for everybody operating in the construction industry from a financial services perspective, is to share information. A lot of the information, or a lot of the measures and tools that we can implement. Information comes to us at a later stage once the company's already gone into liquidation. So companies or insurers specializing in the areas of credit insurance, these are normally the guys that have first-hand information on companies defaulting. So if insurers could share information, we can then put the necessary measures in place to ensure that we mitigate the loss as far as possible.
Excellent. Thank you so much for joining us.
Thank you.